Do you want to learn how to identify key levels where big players are placing their orders? Then you should certainly study the concept of order block. In this video I will teach you how to identify these critical levels. We will start with the theory first, and then I will share with you the real market examples. Also, you will learn how the order block is related to smart money concept. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. Cheaters, don't forget to subscribe to my free Telegram channel. There I share daily forecasts and signals. There I share useful tips and trading education. It is called VasilyTrader. The link in the description below. Subscribe and let's continue. First, let me explain to you what are the smart money concepts. The smart money concept is the way of understanding how the big players like hedge funds, the banks, the institutional traders move the financial markets. By analyzing the behavior and the actions of the big players, you can understand better how the market will trend in future and benefit from that. Being a smart money trader signifies being able to spot the signs of big players and being able to follow them making big profits. But how can we identify the signs of big players? How do we know that big banks, big institutional traders are placing their orders? There are multiple ways to do that, and one of the easiest ways to spot the signs of smart money is to learn to identify the order blocks. And what exactly is the order block? Order block is the specific zone where the institutional traders placed their orders in the past. These orders represent the large amount of capital that can dramatically influence the direction of the market in future. Because these orders are so significant, they can create the important support and resistance levels from where big profits can be made. Simply put, the order block is the support or resistance area where big players were placing their orders. But how to identify the order blocks? Let's open the charts and let me show you how to spot them properly. Here is $P chart, daily time frame, and the first task will be to look for key levels, to look for support and resistance levels. And when we are looking for the order block, we strictly are looking for only horizontal key levels, the horizontal support and horizontal resistance. And our first resistance is over here. Yes, you can see that here we have a very important swing high from where strong bearish movement initiated in the recent past. Then over here we have one more very important resistance. Again, you can see that in the recent past the market dropped from that structure, and today, once that structure was reached, we see a strong bearish reaction. Then we also have a very important horizontal structure support right here. It is the zone of demand based on these two horizontal supports, and we saw a very nice bullish reaction from that structure in the past. Then a bit lower over here we have also a very important horizontal key level. It is a very strong support that was a resistance in the past, and that turned into support after a breakout, and from where a strong bullish movement initiated. A bit lower over here we have one more very important structure, and again from that structure a strong bullish movement initiated, so we can call that a key support. Then over here we have our last support based on the current local low, and from that support a very strong bullish trend initiated. So we spotted the support and resistance levels relying on price action. We analyzed how the market moved in the past, and we were looking for the areas from where significant moves initiated. So here we have two horizontal resistances and four horizontal supports, and all these structures are the key levels, but not all the structures are the order blocks, and some of these structures won't be the order blocks. In order for the structure to be the order block, we should see the signs of smart money within that structure. So let me explain to you how to identify the signs of smart money within the structure. In order to identify the signs of smart money, we will apply the volume indicator, classic free volume indicator. Once you have your volume indicator on the chart, you should draw the level of the average volumes. So you should analyze the volumes, you should analyze the volume activity, and you should spot what are the average volumes. So here you can see that here are our average volumes, and you can see that most of the time the volume activity fluctuates around that level, and just occasionally the market violates that important area. So why for us the average volumes are so important? Because what we will look for when we analyze the order blocks, we are looking for the volume spikes. We are looking for the volume spikes because the volume spikes signify the activity of big players. The volume spikes signify that big players are placing their orders. So in order to spot the order block, we will analyze how the market reacted to a key level in the past, and we will analyze the volumes when the market tested that area in the past, and we will look for the sign of the big players, and the sign of the big players will be the volume spike. Let's analyze our first resistance. That was the resistance from where just recently the market drop shopped, and let's analyze the volume activity within that structure. In order to do that, we take the candles that were formed within that area, within that resistance. So here will be our first candle, and here will be our last candle. And what we do, we just check the volumes there. And you can see that even though a strong bearish movement initiated, volumes were very low, and the volumes were below the average. That signifies that resistance right here won't be the order block, so we take that away from our chart. Now the next resistance, here it goes, and let's again analyze the volumes. So we take the candles that were formed within that area, that were testing that area, and we check the volumes. And again, you can see that even though strong bearish movement initiated from that resistance, volumes were very low. So again, it is not the order block, so we take away that structure from our chart. Then the support. Here is our support, and that support was tested 2 times in a row in the recent past. Here goes our first test, and we analyze the volumes, and you can see that the volumes here were just average. How about the second test? Again, we just take the candles that were testing that support, and we check the volumes. And again, traders, the volumes were average. So again, it is not the order block, so we take that level away. Then the next support. Take a look at that structure. First, it was a strong resistance, and after the breakout, it turned into a very important support. So first, let's analyze how the market was reacting to that when it was the resistance. You can see that even though from that structure we saw just a tiny bearish movement, a pullback, check the volumes. Check what was happening with the volumes. Here we got the significant volume spikes, and you can see that volumes were extremely high. Then when that structure turned into support, let's check the volume. Here goes our volume activity, and you can see that here we got the volume spike, and here you can see that the volumes were above the average. And why is it so important? Because this volume spikes signify the activity of big players. It means that within that area, we saw significant trading volumes. Big players were placing their orders, and volume indicator reflects that. So here is our first order block. It is a very important structure that we should keep on our chart. The next support. You can see that from that structure support in the past, a strong bullish movement initiated. And let's analyze the volume activity when the market was testing that support. We take these 2 candles because with these 2 candles, the market was testing that support, and we check the volumes, and you can see that we have very high volumes right here. We have a very important volume spike right here that signifies that the big players were here, that the trading volumes were very high, and for the institutional traders, that structure was important. So here, that support will be the order block, and we keep that on our chart. The last support. From that support, that entire bullish trend initiated, and that support was tested by just 2 candles. So let's analyze the volume activity there. We take these 2 candles and we check the volumes, and we can spot that again, when the market was testing that support, we got a volume spike. Again, it is the order block. And here we see the signs of big players. As you remember, analyzing just the key levels, we spotted 6 key levels. We spotted 2 very important resistances and 4 important supports. But then, analyzing the volumes, we came to the conclusion that here we have just 3 order blocks. And order block is typically the stronger key level. So the order block is the stronger structure than just support or resistance. And you should pay close attention to these areas because from these areas we can see the significant price fluctuations. Now let me share with you some tips. First of all, you are probably wondering what is the best time frame to identify the order block. And the answer is that you can spot the order block on any time frame. You can spot that on 15 minutes chart, you can spot that on a weekly, on a daily, but the rule is that higher is the time frame, stronger is the order block that you spot. So the order block that is spotted on a daily time frame will be stronger than the order block spotted on a 4-hour time frame. Secondly, you are probably wondering how exactly to draw the order block. And I know that there are a lot of different ways to draw that, but my way is based on the candlesticks. So here we have the strong resistance, and that resistance is the order block. It is the order block because here we got the important volume spikes when the market was approaching that. And in order to correctly draw the order block, we will take the highest candle close within that area that will be its lower boundary, and its upper boundary will be the highest wick. And here we also have the order block that is the support. Here it goes. And in order to confirm that it is the order block, we simply check the volumes and we see the volume spikes when the market was testing that support. Then in order to draw that properly, what we do, we take the lowest candle close. It will be the upper boundary of the order block that is the support, and its lower boundary will be the lowest wick. That is how we draw the order block being the resistance and the order block being the support. Lastly, we should discuss how to apply the order block. And you should remember that the order block is the critical level of support or resistance. And of course, once the market is approaching the order block, probabilities will be high that we will see a strong reaction from that. However, once the market is approaching the order block, it is highly recommendable for you to look for some kind of confirmation. The confirmation, the proof that smart money is still there and that the reaction will follow. Let me know in the comment section if you want to learn how to trade order block and if you want me to record the order block trading strategy. Also, traders, don't forget to subscribe to my free Telegram channel. The link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you soon. Thank you so much for watching.